I can't believe the division that I'm seeing. It's a market for once. There is a group of individuals that really think the equity market needs the DC story to play out to support valuations through the rest of 2017. Then there's a group of investors that just think we've faded that story already and it's not needed. It's upside risk. Where do you stand on that debate, Bill?
Yeah, I'll go on the second one, because I always thought at the beginning a lot of the move up has really been based, in my view, on the fundamentals. You know, we've seen the global economy really get better. We saw it really, I know we talked about first quarter earnings ad nauseum, but I'm going to go into it more in terms of the details that we saw a lot of global earnings look a lot better finally underneath within the S&P 500. So I think that's just, if we get some sort of, and I'm going to say, hey, I think it's going to be some sort of tax cut. It may not even come this year. If we get that, I think you're right. I think it's generally gravy at this point. We've kind of unwound a lot of the big expectations for a bunch of fiscal stimulus.
Bill, size matters here. Is it still going to be a big cap story through the rest of 2017 with the international story in mind, or does the small cap story start to play out if we get that DC action?
I think you get some help on the small caps if you get the DC, so maybe that's the upside somewhat to the small caps. I think the revenge of the large caps lately has been a lot around that trade where the large caps have, on the whole, much more exposure to to global markets, and that's kind of a reverse of, what we saw earlier, and I think a lot of it has to do with that, with the pickup outside the U.S.
Frank, you look at the charts. Bank of America said equities were the last one standing. We make this case, but S&P's right still around record highs. What do you see?
Well, for the S&P 500, the same kind of recipe has been playing out. Breakout, consolidation, breakout again. And the missing ingredient over the last few weeks or so has been we haven't had too much power behind it. It seems like every day we're hit with a new stat that says it's been quite quiet, right?
So what chart are we looking at here? So this white line is 2013 for the S&P, right? And the orange line is 2017. What does this echo to you then? Okay, so this goes back to a study it came across last week. My good friend Ryan Dietrich over at LPL Financial noted that it was day 100 last Thursday, and the S&P was up 7.5% that day. And that combination has only happened 23 other times since 1950. And going forward, notice that of those 20 times, the market was higher from day 100 to the end of the year, 20 times, so 9% or so. But here's the kicker. The average gain from day 100 to the end of the year was 9%. So the last time that happened, as that chart showed, was 2013. And basically the stock market doubled from that point. Now, it's not saying that can happen again, but we can combine that with the fact that the market's in a structural uptrend still. You can kind of see that happening. And if that was the case, the S&P would be at 2620.
Do we know what happened to those other three times? 20 out of 23 is pretty good odds, but three times it didn't. Was there some special intervening event? Well,
of those other three times, the market still finished the year higher.
Oh, it did?
Pulled back a bit, but still higher on the year.
So that's 100% odds, actually.
Yes.
Yeah. So, Bill, as you look at this going forward, what will be supporting the market continue to move forward? You think it's the fundamentals. Is it earnings that will happen? And if it's earnings, where do those earnings come from?
Yeah, so I do think it's the fundamentals. So, one is obviously the underpinning of the global economy acting better, and you can talk about Europe, at least so China last night, the PMIs at least looked like they were holding in there well. So I think the earnings partly is getting a boost perhaps from this global side of things. And don't discount that the U.S. economy, we think, is bouncing back here for the rest of the year. May not be as quick as we were hoping here in the second quarter, but certainly the second quarter will be well above what we saw in the first quarter in terms of U.S. growth. So I think that's where you get it. I think the hard part is you are going to see likely we've seen kind of the peak earnings in terms of the speed of the earnings growth here in the first quarter, but it still should show up to be good earnings for the rest of the year.